Hello and welcome. You're watching Business Today TV. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, starting from the benchmark index moves to the sectoral action and all the stocks that are buzzing the most in trade. But what we'll also focus on is the Q4 earnings review. We've just seen a whole host of companies report their earnings and what does come out of it and what are the trends that we have seen, which are the sectors that have led the show in Q4 FY23, which are the sectors that have underperformed, and going forward, what is the outlook, the top stocks that the experts are looking at. All of that will be also the focus of this discussion today. But first up, a quick check on how the markets are doing at this point in time. Remember, last fag and buying really pulled up the markets into the recovery zone yesterday at close, and the markets have built onto the gains in today's trading action. We are seeing the Nifty up by 64 points at 18,664. The Sensex is hovering about 160 points higher at 62,951. So very close to that 63,000 mark. Quarter percent to a 0.4% of an uptick today for the benchmarks. The mid caps are in fact leading the show today with 0.8% of an uptick. In fact, the small caps are also doing well. 1.2% uptick for this one. This is the index that has been leading. Apart from it, when we also look at the sectoral action in today's trading action, starting from the Nifty Bank to the other sectors, you will see a lot of sectors still hovering in the green zone. Nifty Bank, for example, is flat with a positive bias, but several of the constituents, financial services, private banks, PSU banks, in show in today's trading action. FMCG stocks definitely doing better at the top point of the day. IT stocks have recovered about half-odd% of gains coming in after the IT sector registered the worst fall in the last 2 months yesterday. We're seeing financial services absolutely flat right now, not too much of an action coming in, but definitely in the positive zone. The realty pack doing better, about 0.7% of a gain over here for this one as well. You're also seeing the PSU banks really return to the recovery zone with 0.7% of gains. Remember, the last 2 trading sessions, they've not really had participating in the market rally. The private banks, in fact, are sulking with just flat with a negative bias in today's trading action. Autos continue their dream run, half-odd% of gains coming in. 14,800 crossed on the Nifty Auto Index in today's trading action. Constant record levels being seen on this index as well. Apart from this, we're also seeing the consumer healthcare space also doing well. So large part of the broader markets in the green zone in today's trading action. Some of the stocks that are actually as part of the gainers today are from the FMCG basket like Britannia, Nestle. We're also seeing BPCL up by 3.5% in trade today. Also, Tata Motors, Tata Consumer Products, HDFC Life, some of the other movers in trade as well. What's not doing well, not contributing to the markets in today's trading action? Let's take a look at those stocks as well, which are as part of the Nifty laggards today. M&M, Kotak Mahindra Bank, Bajaj Finance, these are the laggards today, 0.5% to 0.8% of a decline for this one. But time to welcome our guest on the show. Siddharth Kemka joins in. He's the head of retail research at Motilal Oswal Financial Services. Siddharth, great to have you with us on Business Today TV. First up, your own sense of how the markets are shaping up. We've been looking at momentum building on. Do you get a sense that we are going to be seeing that record level on Nifty anytime soon?
Yeah, very good afternoon. So I think market momentum is pretty strong. We have seen the global market also being kind of supportive. And with RBI monetary policy ongoing and the US Fed policy next week, the expectations from the central banks is now of a rate pause, which the markets are taking in as positive. And if you look at the overall earnings season that has just gone by, both in India as well as globally, earnings season has been quite good up to the mark, and that is also kind of supporting the equity markets. Nifty on its own, if you look at last 1.5 years, we touched 18,600 in October 2021, and from there we went down and now recovered. So there is almost an 18 months or 1.5 years of time consolidation, which has brought the valuations in the comfort zone from almost like 22, 23 times 1 year forward earnings. We are now at 18, 19 times 1 year forward earnings, which gives a lot of comfort that the market momentum would continue. And a big difference this time is that with FIs on a buying spree, the broader market, which is mid and small cap stocks, are also participating, where we see a lot of individual niche sectors, stocks doing well. And that is something that we believe would be the key driver for the market going forward.
Okay, understood that. But clearly our focus today is also on the earnings review for Q4. You've taken out a report on Motilal Oswal Financial Services on the way you have seen the earnings coming out for every sector. Let's get down to details of it. First up, if you could give us a key takeaway or key highlights of this quarterly earnings that have gone by. We've seen a challenging environment for India Inc. At the backdrop of challenging macros that we've been seeing. How have the earnings really shaped up in Q4 overall, and which are the sectors and this which have actually led the show in Q4?
Yeah, yeah. So I think that is a key factor for the markets amid this challenging global macro backdrop. I think India, the corporate earnings were pretty decent, pretty good. Within our coverage universe, we saw the highest earnings growth in the last 4 quarters. The earnings were clearly driven by financials and auto, while the global commodities, that is metals, oil and gas, cement, these sectors kind of dragged the overall earnings. If in terms of numbers, the MOFSL coverage universe, we saw the net profit growth of 15%, and this was a tad higher than our expectation of about 14%. The same number for Nifty earnings. So Nifty, the 50 stocks combined together, the aggregate earnings grew 16%. Again, the estimates or our expectation was of about 14% growth. And clearly, this earnings growth has been driven by improvement in margins. That is, again, on a 3-quarter high margins that we have seen this in Q4. India, the corporate earnings got impacted because of the high raw material cost, crude oil prices going up, metal prices had gone up, and that led to impact on EBITDA margins as well. Now, most of the companies, be it on the consumer side or on the commodity side, they have been able to pass on some price hikes over the last 2-3
Yeah.
quarters. Plus, the fall in the commodity prices, that has also helped improve margins.
Okay, understood that. Apart from this, Siddharth, if you could just mention for us the top sectors and the weaker sectors, the worst sectoral performances that you have mentioned in the Q4 earnings scenario.
Yeah. So if you look at clearly in terms of sectors, as I said, the sectors which clearly led from the front was auto. The aggregate earnings were kind of more than 100% growth for
Yeah,
automobiles, led by two-wheelers, led by other segments, except for two-wheelers, which was kind of flat.
sure.
If you look at banks, which reported very strong earnings, banks on an aggregate basis reported 43% earnings growth, and
Yeah.
that kind of led the earnings growth from front.
And the worst sectors?
And among the sectors which dragged earnings, metals, we saw 45% earnings decline. Oil and gas sector, cement, healthcare, and retail sectors. So these sectors kind of dragged the overall earnings.
What about the new age companies? I do remember, like, just recently you've got one or two of these companies in the basket into your review portfolio as well. How did you analyze those numbers?
Yeah, definitely. I think these are exciting times for some of these new age companies. We recently started looking at Paytm and Zomato, and both of them came out with very good, strong numbers, better than our expectations. The management commentary too have been quite constructive and positive. Paytm day before yesterday came out with its monthly business updates, where most of the operating metrics saw steady growth on a Y-on-Y basis and on also sequential basis as well. So I think the focus is clearly now towards profitability, both for Zomato as well as for Paytm. The days when they got listed, and there was not much clarity in terms of when and how these businesses will become profitable. But now, almost like 1.5 years later, the management are pretty confident. The numbers are speaking for themselves. EBITDA
Sure.
on an adjusted basis have already turned profitable. But even if you look at post, including all the costs, the ESOPs cost and the other expenses, we expect Paytm and Zomato to become profitable even at net level by FY25, which should drive these stocks higher.
Okay, new age companies, Zomato, Paytm, definitely on the top zone right there. But in terms of the stocks as well, you mentioned about the sectors that led the show and were the weakest in Q4. But in terms of specific stocks, where were your top earnings upgrades and top earnings downgrades coming in?
Yeah, so if you look at the earnings upgrade and downgrade, I will tell you the stocks, especially in the large
Sure.
cap space, where we saw the top earnings upgrade. In terms of Nifty, the top earning upgrades were from Tata Motors. We saw 13% upgrade, Bharti Airtel, Bajaj Auto about 7 to 8%, Divi's Lab from the pharma space,
Okay.
where we are seeing improvement, and Hero Motocorp. So largely, we saw a
Auto
lot of
basket.
upgrades in the auto space. Yes.
Okay, and where did the downgrades really come in on?
So we lowered our estimates largely on the commodity side, as we saw. So ONGC was the top downgrade with 16% earnings downgrade, followed by UPL, Grasim, Hindalco, and Coal India.
Okay, coming in. So from these top upgrades or otherwise as well, from the entire basket of Q4, any top stock recommendations that you've given, top stock picks you've picked out?
Yes, definitely. So we would like to have some of the, so based on the earnings and the outlook, some stocks that one can look at post the quarterly earnings season. So within the auto space, our preferred pick is Tata Motors. We believe that the company will benefit from a CV upcycle plus a stable growth in the passenger vehicle segment, mainly led by the strong penetration on the EV side that the company has been able to do, plus improvement in volumes and margins, which I have already spoken about, and we are seeing good cash flow generation from Tata Motors. So overall, all the engines are kind of firing for Tata Motors. So we see a good upside from here as well. Within the banking space, we like Axis Bank. The business growth was healthy, led by strong traction across segments. Asset quality continued to show improvement. The bank has a strong pipeline in terms of this corporate loan book, and thus we expect good traction in the overall loan book as well. ROAs,
Okay.
ROEs are expected to improve to almost 2% and 18% by FY25. So these two stock picks from are the sectors which are of the leaders of the pack, that is auto and banking.
Sure. What is the outlook now, Siddharth? In the end, if you could help our viewers understand now that Q4 is past, you've also talked about the top picks, but what can one really expect in the current quarter, that's Q1? Which are the sectors that could lead the show in Q1? Which are the things that are turning favorable for some particular themes, if at all you're looking at those?
Yeah, definitely. So if you look at the entire FY23, Nifty ended with an 11% earnings growth, despite a high base of 34% lower than when we started the year. We were about 16, 17% earnings growth, but having gone through such global challenging environment, an 11% growth looks very good. Going forward, we believe that the healthy macros should continue. Oil prices should remain stable, and moderating inflation should be quite supportive for earnings to grow. So we are expecting about 18-20% earnings growth for FY24, from say 820 rupees to 970 rupees, and this will be led clearly by 3 4 sectors. BFSI, auto would continue, but the global metals or the global commodities, that will now start contributing positively. So oil and gas and metals would also start contributing to the incremental growth in the earnings for FY24. That apart, some of the niche segments, niche themes which are not part of the index, but say for example, the defense space, the railway space, power utilities, and the retail space. So the consumption theme on its own should also see good recovery because of the cool off in inflation, as well as improvement in demand. Now monsoon is also expected to be pretty normal this year, although it has been
Sure.
delayed. But I think that should help revive the consumption demand, especially from the rural segment, which has been struggling for last couple of quarters. So those are some of the themes that I think would do well in FY24.
Okay, understood that. Well, thank you so much, Siddharth, for being with us on the show and discussing all these insights from the Q4 earnings. What are the kind of sectors that have outperformed, underperformed, and what does the Q1 outlook really look like? The top picks, the earnings upgrades that you've all shared with all our viewers. Many thanks for being with us. Always a pleasure having you with us on Business Today TV. Let's look at the markets. They're inching higher now, very, very close to that 63,000 mark on the Sensex, just about a few points away, just about 2 or 3 points away now. From that mark, about 18,680 currently for the Nifty as well, 81 points of an upside, so a 0.4% uptick. So the markets are inching higher and we are inching closer to those record levels as far as the benchmarks are concerned. The broader markets definitely outperforming the benchmarks. They have already hit those record levels and are performing near that as well. How much will this momentum continue till, and will we see record levels coming in sooner than expected? And amidst this, what should be your investment strategy? All of this will be our constant focus on Business Today TV, so you can continue to stay with us, and don't forget to subscribe to this channel, and do stay with us onto our other platforms on social media like Facebook, Twitter, LinkedIn and Instagram. Until then, thanks for tuning in.